Hi there, welcome to Markets Tomorrow. I'm Neeraj Shah.
Hi everyone, I'm Avan Dabash, and of course we will be discussing lots about the markets, kind of this move we saw and which are the stocks that you need to keep on your radar. Joining in on the show today, we've got Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. Deven Choksi, Managing Director, KR Choksi Securities, joins in as well, as does Sandeep Vagle, Founder and CEO at PharmaWealth.com.
Okay, the markets for themselves, it was very flat for the index. So the Nifty and the Sensex didn't do anything at all. 13 odd points for the Nifty, 50 points up for the Sensex. But the action was in the broader markets. And I'm sure Avan will cover lot of these stocks. But if you look at the index, there was activity within the Nifty. So the metal names did very well. It was Metallica all the way. The likes of NMDC, Hindalco, Tata Steel, Jindal Steel, which was being picked up as a BTST quite actively. So those stocks did very well. IDFC and FPO in the offing. That stock recovering a bit of lost ground today. And autos were in the forefront. So not just Hero, which gained 3%, but I think some of the others like Tata Motors, etc. did very well. And PSU banks at large had a very good session too. I think the big drag and the reason why the Nifty didn't do too well were two or three key reasons. One of them being IT. CNX IT took a big hit. And if you look at the Nifty losers, HCL Tech down 3%, TCS, Wipro, Infosys, all of these stocks were down. And you had heavyweights like the likes of RIL, ONGC, NTPC, Coal India in particular, as well as RIL. So these are heavyweights on the index, and these stocks also went down in the session, Bharti Airtel being the other one, and which is why the Nifty ending in the red. All in all, metals doing very well, but otherwise a bit of a lackluster show on the large caps. But Avan, mid caps were in a frenzy. Look at PSUs, look at banks, you name it.
Yeah, absolutely. And you know, on a day when the frontline index saw quite a bit of consolidation, they didn't take any cues from the frontline index. It was a complete tangent of their own. And you can see that the broader markets clearly outperformed today. It was a sea of green, lots of sectors which were very active today. But particularly you had the small cap end of the market also, which was just about 2 points shy of the 52-week high during intraday trades, and it went on to end higher by a good 2.5%. Well, let's run you through some of the stocks which were fairly active. HMT, ITI, some of those sick PSUs on account of the news of the Finance Ministry may set up a national asset management company which will be the nodal agency for banks, NPS, and also which will help to revive sick units of PSUs. So some pretty spectacular gains coming into these counters toward the fag end of the session when this news was announced. And apart from that, it was PSU banking stocks all the way which really held their head up high after the banking secretary proposed that there are ways to shore up capital and bring down the government's holdings. So some of these stocks hit fresh 52-week highs, and all of the components of the CNX PSU banking index did fairly well for themselves. Suvin Life Sciences saw a good leg up. They secured one patent in the United States for a neurodegenerative disease, 7% higher. You had some block deals which clearly kept Welspun Corp pretty active. It was 3.1% of the equity which traded in two blocks, and the two promoter units acquired 3.1% stake in the company. Remember, they're looking to consolidate their stake, and the current promoter holding is at 41%. But all in all, it was a fairly strong day of trade when it came to the broader markets. But let's get in our experts to find out what their views are going forward. And Deven, I'm going to start off with you. Do you think that, despite the fact that we see bouts of consolidation, this is only inevitable given that the undercurrent remains strong and that perhaps we're likely to see a floor being maintained at levels of 73.50, 7400?
Avan, I certainly believe that I think the market is making a good amount of base at current levels. The primary reasons are that I think most of the investors who have gained in the initial round of investment that they have done into the market, they are also booking profits, and they are also looking at the valuations under which they are booking profits. So to a greater extent, I think it's more of a stock churning or sector churning which is taking place right now. To my mind, I think this churning is unlikely to dent the market beyond a point, because I think there are not many negatives right now at this point of time. On the contrary, I think market is positively looking at every possible cues which are coming in the way. Right now, I think the RBI policy has given a good amount of confidence that going forward the rate of interest is going to go down with the inflation coming down as well. Along with that, the monsoon factor, and I think more importantly, some of the policy-driven announcements or likely announcements which are coming up, which is keeping market, I think, quite active. So to my mind, I think the market would take good support at somewhere around 7250, 7300 in a worst kind of a corrective situation, and probably I think you would see individual stock buying taking place during this particular correction. Reasonably more confident that where there is value, you will find, I think, good amount of takers in the market.
Jonathan, what is your argument for the markets right now? Do you believe that a large part of the rally is done and all the outperformance is already there in the price, and now the script of the Indian markets, how they move, will be a function of earnings and government action?
Yes, I think if we look at equity markets, when we have these kinds of dramatic political changes, there can be many phases to the rally. Typically, you get a strong pre-election period of outperformance. We certainly had that from India. Then a more range-bound period whilst the equity market digests the previous gains, and then we move on to this delivery phase. If you look at Japan, for example, that market's been range-bound for some time as we enter the delivery phase following the dramatic changes they had last year. And for India, what we're looking for is to see whether growth picks up from low levels. Our economists are forecasting that that is likely, and whether corporate ROE, that's very depressed by Indian standards at the moment, again begins to move up over the next year or two. If that does happen, then I think the medium-term outlook for the equity market is still very encouraging.
Sandeep, run us through your assessment of the kind of moves that we're seeing on the frontline index, because on a day on which the Nifty is consolidating, you see the bank Nifty holding up and vice versa.
Well, yes, absolutely, Avan. There will be some shifting. Some days back Nifty was strong. Before that the bank Nifty was strong. Today again the bank Nifty was caught up. Yesterday the bank Nifty was weak. I was not very clear. So I would say that I am not seeing any weakness per se, but yes, there can be a correction. If you talk of the Nifty, a 7300, 7350 on the downside should act as a support. On the upside, 7500, 7550, I still don't think we have that kind of strength to break that and go towards 8000, 8200. That will happen eventually. But I don't see that happen in the next couple of weeks' time. It will take a couple of months or so. So in that sense, talk of the extreme short term, that is a month or 4 to 6 weeks' time horizon, I would broadly talk of a 7250 to 7550 range on the Nifty.
Right. Jonathan, I'll just stick to the markets because there's a clear shift now towards the cyclical end of the market, and money seems to be clearly easing out from the pure defensives, the likes of FMCG, IT. Is it a good time to start nibbling into the defensives?
If you look back, a year ago or 2 years ago, what we were recommending to our foreign clients in India, it was very much what you would call defensives. And we are looking essentially at pharma and software names that are globally attractive, that they have dollar revenues, local costs and low levels of gearing, and they're not that exposed to the domestic economy. But for us, that changed in the run-up to the election, and we recommended taking profits on the software names, and we rotated into domestic cyclicals. Both myself and my colleague Ridham Desai here in India recommended that. In my case, we put into our Asia ex-Japan focus list two names, Tata Steel and also Maruti Suzuki, and those names have done well for us. It's probably still too early to look to rotate back into software, but we retained a core holding in the pharma sector, which we've liked for many years in India.
Devin, what would you make of the kind of traction that we've clearly been seeing in the PSU space now with the news coming in with respect to revival of sick PSUs? That's certainly going to be a shot in the arm. Is it a good time to put money in here?
Well, yes, answer is yes. For sure, I think the PSU offers an opportunity, provided the government is taking some of the quick steps to basically, I think, arrest the kind of policy lacunas which are there into many of the PSUs. Also, at the same time, I think many places, I think you are also finding that the implementation shortcomings are there in the system. So as a result of which, I think even though they have projects in hand, I think they probably find it difficult to implement it. I think if these issues are resolved, and which are in all likelihood will, probably I think many of the PSUs becomes attractive. Look at, I think, the public sector banks. They are basically, I think, the buzz is right now that the government may create a kind of a structure wherein most of the PSU banks holding would be transferred to a holding company, and in turn I think the listed banks would be allowed to create a new float in the market, and in the process I think the government's holding would come down, I think, through this particular float mechanism. So to a greater extent, I think even the stake reducing formula that they are adopting is largely driving the growth by way of infusion of new capital, which will also take care of, I think, requirement of new capital coming from the government side. So to a greater extent, I think it is an advantageous even for the economy point of view also. So according to me, I think PSU stocks really offer good opportunity. However, I think one needs to be very selective in the approach, because not everything would go up at the same time. So one will have to look at, I think, where the possibilities or where the first possibilities could materialize, and that could be the opportunity to make money from this market under this scheme.
Sandeep, PSU banks or metals, both pockets active today. Which one did you like more? Any stocks that's caught your eye?
Well, metals have moved up quite a bit, though, Neeraj, I would say there is some more upside left. But at this time, at this level, I would look at some PSU banks. A syndicate bank, a UCO bank, these are beginning a fresh move. And in that sense, I would look at a 8-10% trading upside in the immediate 3 or 4 or 5 trading sessions. So I would play for that.
Jonathan, wanted to get in your views as to what exactly you make of the pharma space as a whole. You've been fairly bullish, but as of now, valuations are not really cheap. And right now, when the currency is no longer a tailwind, valuation support is missing. What makes you so upbeat on the space?
So we have these two sectors that historically we've recommended in India and have done very well, as you say, are on higher valuations, software and pharma. Our industry quant model suggests that we should hold on to the pharma names, but we lightened up on the software names a while back. And I think there is a unique position that the Indian pharma sector has in terms of global markets, which is much to the credit of the firms that work in that sector. We don't want to move to a fully pro-cyclical position, so we're changing things at the margin here, but we decided that of those two industries we'll hold on to the pharma ones.
Deven, you've been bullish, I'm just coming back to the metals discussion because you've been bullish on some of the metal names, particularly the Vedanta Group stocks, but they've had a fabulous rally till now, Deven. What do you do with a Sterlite or a Hindustan Zinc now?
Well, according to me, Neeraj, I think this run which has happened into these stocks is largely a re-rating, as I would call it. These stocks were undervalued from all perspective. Even then also, I think it was found quite undervalued. Today also, I believe that they are, not yet fairly valued. They are still undervalued. The primary reason for, looking at this company in case of Sesa Sterlite, I think you find that the operating performance, all from the iron ore business as well as from the copper business, and I think the other companies which are there in the fold, particularly Hindustan Zinc, they are all likely to be, quite smarter compared to what they have seen in the past. Second thing, the metal business per se, is likely to remain buoyant for next 3 to 4 years. The cycle has actually improved very significantly. So to a greater extent, I believe that this is going to be a positive sign. And should rupee starts appreciating and the input cost comes down, then probably the margin would spell out a little better for this company. So all in all put together, I believe that many of the metal companies are ripe for adding into the portfolio. Even though Vedanta Group companies have moved up, Hindustan Zinc as well as Sesa Sterlite, I still feel that there is a lot of opportunity into this counter. Maybe corrective downside into this counter should be used as a buy opportunity and stay invested with at least 2 to 3 years perspective.
Sandeep, both the oil and gas heavyweights today were under a fair bit of pressure. Reliance Industries as well as ONGC, which shut shop at 411. What's the sense that you're getting on the charts here?
Well, ONGC for me is a buy on every decline. So is Reliance. Reliance is also not looking weak in the long term. I would buy them, but I would buy them only if I have a 3 to 6 months time horizon. No point in trading them for a few weeks. That may not work out. ONGC in the range of 390 to 380, that's a good buy. And I would talk of targets of 450 plus with a 3 to 6 months time horizon.
Jonathan, let's keep it with the general market sentiment. What's the sense that you're getting right now? Is the market anticipating a lot of reforms for the government? Hopes are certainly running high before the budget. But what are the big ticket reforms that could be in the pipeline?
Certainly we think India is going to be unique in terms of the enormity of the change politically this year. We have many other countries in the emerging world that have elections. South Africa's already had them. It's upcoming in Brazil and Indonesia, but we don't expect anything like the dramatic change. So that's certainly attracting attention. We now are entering this delivery phase, and I think what foreign institutional investors will want to see is whether we can actually improve infrastructure delivery. So we've seen some early positive signs in relation to road projects, but I think the power supply agenda is a very important one for India, and we want to see whether the public administration can be made more efficient going forward. India doesn't score very well in relation to things like World Bank surveys of ease of doing business, and I think we want to see whether there is a more attractive overall business environment and whether we get a more attractive environment for inward foreign direct investment as well.
Devendra, we've talked about a lot of large caps. I just want to come on to some of the broader market pockets and two spaces, agri. One is sugar, one is fertilizers. On both, there are reforms expected. Sugar with the whole ethanol thing, fertilizers with what the talk about the price rise, etc. Do you like any stock or do you like either of these two pockets at all in the first place?
More than fertilizer, I would prefer sugar. That's the first point. I think why little less preference for fertilizer? Because it's relatively a sensitive issue. I think to increase the fertilizer prices, I think, and dent the farmer's prospect, I think is not something which the government would easily do it. So I think to an extent, I think I would keenly watch for the policies that the government comes out with, I think as far as the fertilizer price hike is concerned. On the other side, I think when you look at the sugar portfolio looks relatively better. A, it's a free environment now. B, I think the troubling issue out there, particularly in the UP, is about the sugar price, purchase price. I think if that is a formula which the government successfully comes out with, according to me, I think that could be the first trigger for sugar. Otherwise, I think for the commodity point of view, sugar prices are likely to remain good firm because of the Brazil issue. To a greater extent, I believe that I think the sugar prices would remain firm. And India being a net exporter of sugar in this environment, I think it could help most of the sugar companies because of the shortage out there in Brazil. Along with that, if you look at the ethanol mechanism that is being talked about, yes, it is a challenge to, I think, have the blending of such a high grade or high percentage. But at the same time, I think it will give a good amount of leeway to most of the sugar companies to switch over from sugar to ethanol and vice versa in a given situation, because the prices are now in a free market. So to a greater extent, I would still remain a little bullish on the sugar at this point of time, because I believe that sugar could possibly get into a very good cycle going forward. And EID Perry kind of a company within the sugar space remains relatively more safer, given the fact that they are also starting the sugar refinery in the next month. I think this company looks, I think, relatively more interesting compared to many of the UP-based sugar companies as of now.
What is your sense, Devendra, from the media space? Because, be it print, be it some of the broadcasting names, you have seen quite a bit of activity brewing over here.
And I think this space is going to remain very positive as I see it. I think both from the point of view of, I think, seeing the larger amount of penetration which is happening due to the digitization process, which is adding into the subscription based revenue, and also I think it is bringing up the prospect for a higher amount of ad revenues. With the economic growth improving, I think the ad revenue contribution could probably improve in the media space. However, as you rightly observed, many of the companies have actually, I think, ran up a little ahead of time, and the valuations are quite expensive to an extent, as I would call it. So I think one will have to be a little bit more careful in buying those companies at this point of time, because they may not perform bad over a longer period of time, but in the shorter period I think they may underperform the market. So one will remain a little bit more careful. As of now, we don't have any particular coverage to talk about, but we do like the network eating story which the Reliance is basically working with, because that's a good integration that we see along with their 4G network, and that's where I think the larger amount of unlocking valuation potential is there as far as I think the network eating group of companies within the different franchise, be it the TV franchise, be it the portal franchise, or be it the e-commerce franchise that they have. From that, I think they may have a higher amount of valuation prospects. So I think we do like that space, or the company within this space.
As promised, we're giving you an insight as to some of the stocks that you need to keep on your radar, what our experts like, as well as getting a sense as to what the dealing rooms are advising. We've got Ajay Sharma standing by from our research desk with the details. Ajay.
Hi Avan. Avan, the two stocks, which dealers are very actively looking at, one of them is Ashok Leyland. The stock was gaining about 2% in trade, around 35 rupees a share. We understand that there could be a proposal of a mass transport system in this budget, which could take, the dedicated roads for several buses into several cities. Right now, this kind of system is only in Ahmedabad and Bhopal, but we understand that the new government may try and replicate this model in hundreds other cities in the country, the large ones, which could lead up to 8 to 10,000 vehicles new demand, and Ashok Leyland and Tata Motors are likely beneficiaries. Out of that, Ashok Leyland is trading at a lower valuation than Tata Motors, and dealers are recommending this one should be bought to play the CV cycle right now. The other stock is Punjab National Bank, still trading around 1,000 rupees a share, which is around one time price to book on an adjusted basis for 1 year forward earnings, much lower than what SBI is trading at. And now that the banking SECI has indicated that there is scope of trimming government stake in PNB by 5 to 6%. There is the expectation that it will happen, but by the time it happens, the stock would have moved higher, and dealers on the institution side are recommending this one to be bought on expectation that there would be a premium at which the stake sale would happen. So 100 to 150 rupee upside expected in the next couple of weeks before that deal actually happens.
Right. All right, Ajay, many thanks for giving us that update. Watch out. One very highly priced stock in terms of the ticket size, one a slightly lower stock. On to stock ideas from Sandeep Wagle first then. Sandeep, what is it that you're recommending for a trade tomorrow?
Niraj, buying an NMDC, stop loss of 184, target of 198. Buying a JSW Energy, stop loss of 76.50, target of 87.
Devin, what's your sense in terms of preferred sectors that you'd look at for a long-term view?
Well, we like, I think, select stocks within respective sectors. Within oil and gas space, of course, I think ONGC Reliance remains favorable. However, I think we use correction as an opportunity because having invested earlier, probably I think the best time to buy further, I think would be in corrections. The other interesting space in the stocks within that I think we like is the agri space. Here we like companies like UPL, we like companies like Advanta, and we like companies like Jain Irrigation. Of course, all of them have run up, and probably I think they are quoting little bit expensive comparatively than what they were quoting earlier. In the near term, at least the earnings of the companies are not going to immediately respond. However, I think the market would probably assign a good amount of allocation to this kind of businesses. So from the fact that I think these companies are available at a good valuation today and could probably come down under correction because of their ran up, I think it could be a good opportunity to buy into these companies. Likewise, I think one could probably also concentrate on some of the auto names like Bajaj Auto, like Tata Motors, and even Ashok Leyland. I feel that I think these are some of the companies which one could consider having in the portfolios. Of course, I think our horizon is long term, so I think in the near term, I do not know how their price would behave, but I reasonably remain confident about, I think, these companies performing better going forward.
Jonathan, from a one-year perspective, do you think that the best is yet to come for the equity markets, or has it already run up too much?
Well, we set a target for the Sensex. It's 26,300. So for the Nifty, that would be approximately 12-month forward around 8,000. And that's sort of in line with the upside we see for the rest of emerging markets now going forward. That's sort of a base case situation. If we do get the delivery phase surprising on the upside, then the rally can continue. But my best guess right now is we enter a range-bound phase, at least until we get the budget.